purchases directly related to the sales were 20,000. So her gross profit is 60,000. That's again gross profit, not net profit. We have some more expenses to deduct in this panel. All right. So in this panel go all other expenses, called overhead sometimes. So salaries and wages. Mary employs one assistant part-time, so she paid her 20,000 in wages per year. So the figure goes here. She didn't pay to any subcontractors. Consultancy fees of 1,000, motor expenses of 1,000, and other expenses of 8,000. Similar scenario for simplicity. The next panel is her balance sheet and capital account based on the balance sheet statement. Again, similarly to the previous scenario, this statement consists of your assets, so your cash, your fixed assets, any money due from customers, and your liabilities, which are what you need to pay to your suppliers. And this is also your capital that you invested in the business. So for simplicity, again, drawings that she took from the business, 10,000. Just to highlight here that drawings are not treated as expenses for sole traders. I have a slide somewhere later on about that, I think, because it is always confused. What you take from the business as a sole trader, it's not an expense. It goes into your balance sheet item as a minus figure on the liability side. It's something totally different. You will find out more about it on my course about the basics of bookkeeping and accounting. So on the asset side, 10,000 in the bank and net asset positive 10,000 equal total liabilities, total capital positive 10,000. Again, we need to repeat the adjusted net profit figure of 30,000 for Mary. And if there were any adjustments for the private use of business equipment, the figures would go in here. Irish rental income, again, we will not go through this one. I already said what it was. This one will relate to employment. Because John is employed as a PAYE worker, his employment income will go into this section. So we are ticking the box that it is for self, for John, who is the main accessible spouse, the details of his employer, gross income from the employment. These figures will be already in the system because last year the revenue, there is an automated system to report on all the payroll. So you just need to validate the figures with your pay slips, with whatever documentation you have from your employer. These will be entered automatically in the system. The income source, employment, net tax deducted by his employer, gross income for universal social charge deducted by employer, and payment frequency monthly. That's the basic information you have to enter for employment. Again, it will be populated by the system. We continue to the next screen, which also relates to some PAYE information. What do we have in here? Again, exactly the same as in previous scenario. We may have for them, yes, some social welfare payments. So Mary received 1,000 in illness benefit in this example. So in the column spouse, her illness benefit income will go into this field. Okay, you should always confirm with social welfare office the official amount, the total amount paid to you. In the next fields for this scenario, what else do we have? That's it for them. We go to the next screen, foreign income, Irish other income. These are not relevant, exempt income, charges and deductions. We go to personal tax credits. Because they are a married couple, they are due the double tax credit for both of them. The system will calculate it automatically for you because it is specified that they are a married couple. Then what else? These sections are important because John is employed. He has PAYE income. He will be due employee tax credit. We need to tick this box. However, Mary was not employed. She was self-employed, so she is due earned income tax credit. We will tick this box for her. You can't tick, if you tick both, the system will accept it, but the system will take the most appropriate one. So it's better to do it correctly. So employee credit for John, earned income tax credit for Mary. These ones are the most important. What else? No other tax credits for them, I think. There will be some medical insurance release. Yes, we have it here. Medical insurance relief. So that's for medical insurance premiums paid to Viva, to VHI, sorry, Leia Healthcare or Aviva or whoever provides the medical insurance.